There is a massive sell wall on Bitcoin right now at around the $30,000 mark. And somebody knows something that we don't know, but in this show, we're going to figure it out together. I'm going to take you through some under the hood kind of software that shows you what's going on. It shows you where the big money is looking to step into the market. And why do we need to know that? Because if we know where they're ready to commit, then we can be on the right side of the trade. So that's what we're going to get into today. If you are wanting to learn things like that, be sure to smash that like button nice and early and hit subscribe, because we are about to go on a journey together. I'm going to take you through this right now to show you the exact sell wall that I'm talking about. This software is a heat map software, and what it does is it shows you all of the current limit orders that are waiting to take positions and what price they're interested in playing the game. Now, we need to know that because when those orders become extremely large, they can cause bounces in the market or rejections or things like that. So what we look for on this is called trading light. There are many heat map software though, but what they do is when I scroll in on this area, you can see that a whole bunch of numbers come up here. The current price is sitting down here. So anything that you see above price is telling you where money is ready to step in to short the market. So high level numbers above price are limit order shorts, and high level below price are limit order longs. So remembering, as you guys are traders, I'm sure you know, when you place a limit order to open a trade for yourself, until that order actually gets filled, you can remove it at any time. So just know that when we talk about these high level numbers that we can see, and I'll go through in detail in a second, that it's not a guarantee that price is going to go there. It's showing us where the current interest is, and we're going to combine that with technical analysis to try and get an edge. Because what happens when we have a look at normal charts is during the weekend, price usually consolidates and does absolutely nothing. And you've probably seen that happen so far this weekend. Come the market open, which opens Sunday, 5 p.m. New York time, anywhere around that time, we usually see a false move week beginning is what it's called. That false move is designed to stop out traders in this zone here who took trades on the weekend. So a lot of people, you've got to understand that trading is all about emotions, right? So when price goes sideways, it's happening on purpose. So they will hold price sideways so that you get bored, right? With price doing absolutely nothing. It's not going up. It's not going down. There's no volume. And the way that they get you to get into a position is to bore you. There's a number of other ways. One can be to issue fast moves that make you think something's going to happen, so you just panic and jump in. But another way is simply to bore you into a position. And that's what happens on the weekends. When price goes sideways, people start guessing, because we're taught that if price is consolidating for a long period of time, that it's coiling up and a big move must be coming. So when you have that in your mind, then the FOMO starts, right? Where you go, oh, okay, if a big move is coming, I don't want to miss out. And so you try to get into trades beforehand, trying to guess which way the breakout is going to come. And as a result, you've now committed to a position. So you now have an open position. Your open position provides liquidity, and every open position, when we're talking futures markets, has a liquidation level. And that liquidation level is simply an order in the opposite direction. So if you have opened a long position, your liquidation level is a short position in the opposite direction. So they're coming for that to stop you out to collect your money. And it doesn't mean that you don't have a chance. That's probably the one thing I really want to get across to you guys. Once you start hearing how I'll talk a lot about where liquidation levels are and why they're very, very important for us to know, I don't want you to think that this means you don't have a chance. If you learn to identify it, then you can be on the right side of it. They say something like 90% or 95% of traders lose money. The reason for that is because they don't focus on things like this. They don't focus on who is actually moving the market and how do you trade like them, because you can't beat them. The only way for you to do well as a trader is to be on the same side as them. And that's what we're going to get into right now. So heat maps helps us understand that. And this is what I was talking about earlier. When I scroll up here to around the $30,000 mark, you can see that the number there says 1.8K. So that's 1,800 Bitcoin worth of orders waiting at $30,000 to short at that level. Immediately under that, currently, we have 29,900. Now, to give you some context, when we usually see orders around 1,000, that's when we pay attention. So when you think about that, and you see that there is 3.6K in total within $100 range, that is something that we really want to be aware of. But then the next question is, well, what is it going to take to send price all the way up there? Is it a clear path to go up there? Are they planning to go up there and immediately reverse? All of these things we have to see in price action. Currently underneath that level, the next high level that is closest to price is 29,300. I'm going to show you what these look like on the chart. So in order for price to be able to get up to 30,000, just know that it's not a guarantee, because like I said to you, if you put a limit order in, you can cancel it anytime before that gets picked up. So can these people who have put this limit order in. So that's why it's really important to know it's not a guarantee. It's just what we're looking at right now. So what we have currently just above price is currently 29,000, just a little bit over that. We have other fairly significant short orders at 29.3. Now, those orders are holding what I showed you here on this weekend trap box. They're holding that to the downside, so we don't break through it at this point in time. Below price, we also have a high level order down here at 28,500. Now, this one concerns me, and I'm going to tell you why. I spend hours and hours a day watching traders on YouTube and what they think, and because the markets are all about sentiment and where everybody thinks price is going to go. So if we zoom out to the daily time frame, you can see here that since the W formation, which we won't talk about that today, but we've created this trend line where we've had here one touch here, two touches here, three touches here, and many people are waiting for price to come back to the trend line, expecting a bounce to the upside. Now, currently, if price does come back to that trend line, it's going to line up with that 28,500 level, so the heat map orders that we're seeing right here. The problem that I have with this is it's too obvious. So, of course, there are going to be buy levels off a trend line, a diagonal trend line. So I would not necessarily bank on price going down there before it goes up for those $30,000 level. But what we do need to do, now that we're aware of what is happening on a higher time frame, we need to then have a look to the lower time frame to see which way the false move might take us, because a false move is designed, as I said, to stop out traders who took positions on the weekend. So it's a false move that goes one way, then throughout the market open, the market will then go the other way. Whether that false move is going to be to the upside or the downside, we're going to try and figure that out in this video right here. But what I want to show you here is that in addition to that $28,500 level, we also have a really high level of liquidations that have been sitting there for 1 month, meaning if they do stop hunt into that level, it will take out those traders. And we get that from high block. So just to explain this high block is very different to what I just showed you with the heat maps, because the heat maps, like I said, they're showing you the orders of where people want to trade in the future. So they're not committed to an open position. They are just hoping if price goes there, it will execute and then they're in a trade, but they're not in the trade yet, meaning they can't be liquidated because they have not committed. They just have an order. When you have a look at high block capital, however, this is showing you the people who are currently committed and where their liquidation level is. So by using them both together, you start to understand that, okay, if there is a high level order down here and you can match up the liquidation level on high block at the same time, then it starts to make sense that they're trying to move price into that liquidation level before they do a sharp potential reversal. So when we have a look at the the high block heat maps, we want to have a look, especially on a Sunday, Monday, we want to have a look at the 7-day look back period, because that's going to show us who has opened trades over the weekend. Because the people who have opened trades over the weekend, they're going to be the market maker's first target to take out. And guys, this is why it is crucial. If there's one thing you take away from this video, because I'll promise you, you guys are going to have to watch me 1,000,000 times before you understand what I say. But I promise you, like, we will get this together and I will take it back right from the start and I will show you everything. But the one thing I want you to take away from this video today is do not trade high leverage. Once you understand this system, you will understand why high leverage is so dangerous, because immediately, if you commit to a trade on a 25, 50x, 100x leverage, you are opening yourself up to be the target. I'm not sure if you fully understand how leverage works, but let me just give you a very quick example. If you were to take a spot trade, let's just say you wanted to buy $1,000 worth of Bitcoin. A spot trade means that whole $1,000 is your money, right? So worst thing you can do is lose the whole lot. You know, Bitcoin would have to drop a lot for you to do that, but the whole thing is your money. Now, if you were to take the exact same position size, or the exact same $1,000 on 10x leverage, only $100 of that position is your money, and the other $900 is borrowed. Who is it borrowed from? It's borrowed from the liquidity provider. The liquidity provider is a code word for the market maker. So now that you know that the market makers are trying to hunt your stop losses, you also now know that they are the ones lending to you to get you into a position. So they're lending you the money just to make sure that they can take it back from you. Because one thing that happens is when you trade on leverage, you have a margin. The margin ensures that the most money you can lose on that trade is your own. They will never let you lose the market maker's money, right? So this is why it's so important. Please stay with low leverage, because it will keep your liquidation level far enough away that even if your stop loss got skipped, you can manually exit the trade yourself before you get liquidated and lose the entire position. So with that in mind, that's what we have a look at when we look at heat maps. When we see high levels of liquidation that are very, very close to price, it's most likely traders that have gone on that 25, 50x, 100x kind of leverage, and they're opening them up to, it doesn't take much of a move to stop them out on 100x leverage. So we're looking at the heat maps to identify who is in the market and at what price. At what level will price go that will do the most damage? So when you're looking at this, we're looking on the side here, it says 3.5 billion, and really you're just looking at the colors, right? So the closest to yellow that you have on this chart, the higher the amount of liquidity there is in that level. So just at an eyeball view, you're looking for the yellow areas closest to price. And if you can't find them, then you're going through the green and whatnot. So what we can see up here currently is that there's a very high level of liquidations at 30,250. And currently, like I said, we've matched it up that we have those pretty strong sell orders at 30,000 on the heat maps right now. So could they potentially be wanting to come for that at some point throughout the week? Maybe. They absolutely maybe could be. When we look below price, the closest we have is around, let me zoom in on this actually. So we've got some green areas at around that 28,500 level that we spoke about, and then 28,150, and then it goes beyond that. But we don't worry about that too much until they've taken out these levels first, because at every level, once they are successful and they take it out, you have to reassess the price action, and through the price action you make your decision as to whether they're going to come for lower levels next, or they're done. The damage is done to that side, and now they're going to go do the damage the other way. So if we go back to the heat maps now and we understand where we are on a macro level, we'll then go down to the smaller timeframes, and this is how we try to assess the weekend price action to give us a hint of which way the false move might happen this week. Now, usually, or lately, I should say, it's not usually, but lately, the false move has been coming in around 6 hours before the market opens, which, as I said, is 5 p.m. New York. And we are, what are we now? We are 10 hours. So we're very, very early. Unfortunately, I'm flying out literally after this stream. So I couldn't stream later today, but in the following weeks, I will be streaming later so that we can hopefully catch that false move week beginning together. But all I can do for now, because it hasn't happened yet, is help you to try to identify it in case it happens whilst I am mid-air flying. And if I am, it wasn't me. What I want to talk about is there is a very big chance that a false move trap, so the idea of the false move is to trap traders into trades in the wrong direction before they send it the other way. There is a very big chance that the trap has already happened. And let me show you why. When we zoom right in on this area exactly, have a look at this. Down here, you guys can see that. Down here, we have all of the market session times already put in for you. If you want this indicator right here, just go to the indicators in TradingView and type in market session times, and it will bring up this indicator, and it just marks this down here. It shades the dead gap zone, which is the 3 hours that the market is open, but it's not an official session. You don't want to trade this. This is the most highly manipulated zone of the day. You want to stay away from it. So if you add these, we can have a look here on the very last gray dot. Have a look at the wick that was formed right here on this. So this was the very last candle of the US session on Friday before the market closed. And when I say market, I'm referring to CMEs. Yes, crypto is 24/7, but the people that move the markets are institutional traders, and they trade CMEs. That's why we want to be trading at the same time as them, because we want to be trading when there's volume. We don't want to be getting into a position like this and have to hold it all weekend whilst it does nothing. There are better things to do in life, believe me. So if we have a look at this, there was a reason that they spiked price down like that. That's a very significant wick on the very last 15-minute candle of the US close. So here's how you're going to judge what happens when the market opens this week. If price does not return to this wick right here, or this candle, I should say, this is called a trap trader zone. So people are trapped in that position, and it may not make sense, but at the time, before this candle closed, it was a very large red, scary looking candle. And that causes panic and fear. So people do go into shorts at the absolute worst time, and that's how they end up getting trapped. So in order for this wick to exist, somebody had to go long and somebody had to go short. Otherwise, it wouldn't be there. So there are people who shorted in this wick and have been trapped into sideways consolidation for the entire weekend. Here's what I would watch out for because of that. I would be looking to see if price breaks out to the upside of the weekend trap box. So I always draw this box from US close to the 5 p.m. New York. And again, if you just add the indicator, you don't have to calculate that. You just take it to the gray zone. But what we're looking for in that box is where do the spikes go either side of price, because spikes show you the direction that they're trying to trap traders, meaning if it's spiking down, they're trying to trap you into short positions before they reverse the other way. If a wick is to the upside, they're trying to trap you into long positions before they reverse the other way. Let me show you right here. For example, right here, we had a very large wick. People may have thought that this here was a resistance level right here. The wick spikes right above. You believe it's a breakout of resistance. You go long. they swing it back the other way. So that's what I mean. Wicks tell you a very important story. And if there's anything in trading that you should learn at an expert level, it's to read candlesticks. So what we can see here is that these are the trapped traders who are trapped into shorts, unless, of course, they've already closed their trades, but it wouldn't be that many people because most people don't close trades at a loss because of ego. We don't want to be wrong. So we will hold on to it instead, hoping that price comes back to our entry and we can get out at break even. And the people that are playing against us, they know that that's how we think and they play on that emotion. So we've got the trap traders down here currently. So what I would be watching for is if price can break out of this box at some time, it may be market open, it may be during the weekend. I can't say at this point in time because it's just not enough structure. But if price does break out and it actually holds above, then I would say that we are going up for the open of the market. And we would have to break the 29.3 next. And if we could, then there's a few liquidation levels above that will become targets initially on the way to hopefully the 30K level. And that is 29.382, 29.548. And then we're looking up here at the 29.9 to the $30,000 level. That is one potential option. The other option is if we break below this weekend trap box and they start coming into this zone too much, it means that they're releasing the trapped traders. Now, that doesn't logically make sense. Usually they trap traders because they're planning to make a move in the other direction. But there could be a reason, there could be something that happens over the weekend that makes them decide if we send price down further, we'll get bigger commitment. And maybe that's what they want. So for me, I would be long as come the market open, we stay clear of this wick. If we start to come back into the wick, you're going to have to reassess, especially if we start to break. EMAs will start to curve if that happens. So let me draw that out. EMAs will start to curve like this if we break below, and then price will probably do something like this. And so any retest of EMAs, once it's broken below this zone here, will lead you to believe that we're likely to go to this 28.5. I don't personally believe that to be the most likely scenario, but the reason I have to put it out there for you guys to watch is because, like I said, we're streaming earlier than when we usually get the false move, and I don't have the price action to tell me which way we're going just yet. So I will never put a trade out there if the story isn't complete. Just know that. I just won't make it up. If it's not there, I'm just going to tell you it's not there yet. So all I can do is tell you what to prepare for in the meantime. The other thing too is what I want you to be very careful of is if we do break to the upside here and we don't hold either the top, the resistance level, or this 200 EMA, then that is actually going to be a false move and we're going down. So you're going to have to look to make sure that if we break to the upside, just keep in mind what I said, that wicks tell the story. If we break to the upside, but it's a very heavy wick pushing price back down, it's likely that was a stop hunt. And don't take the long from there. You want good bullish candle structure. You want full-bodied candles to break the level, then come back and retest EMAs. That's what will give you confidence that we're going up. If you don't get that, you sit on your hands and wait. If it's going down, you need to reassess what happens in this. So that's basically what I wanted to put out. The other reason, what was I going to say? The other reason why I think it's a possibility is because if we have a look here at this bottom indicator, can you guys see that? Yeah. This bottom indicator is open interest. And I won't go into too much detail today because I don't want this to go on for too long, but open interest basically is, as it kind of sounds, it's telling us how many people are committed to both sides of a trade in open positions. So if the open interest is increasing, that means more people are committing to trades, right? If the open interest is decreasing, more people are closing trades. And that's both sides, because open interest only goes up if the longs and shorts are equal. So for every one long that opens, one short opens, and that's how it rises. And then the same when it declines. For every short that closes, one long closes. And right now we have declining open interest within sideways price, and we have terribly low volume. So I've got this little cheat sheet for you that you can screenshot. But what did I just say to you? I just said sideways price, sideways volume, low declining open interest. So we simply match that up here. Just so you understand, when you see board meeting, that's what I call consolidation. So board meeting means sideways price. So we're looking for sideways price, board meeting, low volume, open interest decreasing or flat. The result of that is usually that there is a stop hunt, very likely before the next major move is made. So the stop hunt that comes eventually, hopefully before the market opens, the stop hunt is going to give you the hint of which way they're moving next. Just keep that in mind. If it's a wick to the downside, they're trapping shorts. If it's a wick to the upside, they're trapping longs. And whichever one they trap, wait for the trap to be done, because the trap tells you where your stop loss goes, by the way. It always goes below the trap if it's to the downside, and above the wick if it's to the upside. And then once you know that, once you see that stop hunt that will happen probably in the next 6 or 7 hours from the time we're filming this video, then you can take your position and you can see here the well, you won't be able to see this, but you know the targets because I've told you. The other thing too is look at this happening right now as we speak. 1.2K orders have come in within the current candle at 29,075. Price is currently 29,050. So what's happening right now is they're trying to push price down. So I honestly would not be surprised if the stop hunt is to the downside and then we go up. But that's not a guarantee. Just know that we need to get out of this box first before we know. So I'm just going to take a very quick look at what I can see in the comments, just to make sure if I've answered any important questions. And while I'm doing that, be sure to smash the like button if you haven't already. I hope that you've enjoyed this and that you've actually learned something. So if you have, please leave me a comment. Let me know that you've learned something, because that's my goal here, is not to just put out trades, but actually to help you understand why we're doing what we're doing. Now, let me just have a very quick look here. I'm on my 4th cup of coffee, says Nicholas. The oracle of Dubai has spoken. Oh, my Lord. Okay, I'm just seeing some really good comments. Thank you, guys. That's very encouraging, and I really appreciate it. This is, my first solo stream on Crypto Banter, so very happy to be here. But I don't see any questions, which tells me that maybe I described this really well, and I hope that I did. So I'm going to probably leave you guys now so I can get on my flight. And yeah, just keep an eye out for those things. If anything happens before I'm flying, I will post on Twitter. But in the meantime, you know what to watch for. And if you're uncertain, stay out, because staying out is how you increase your win rate when you're uncertain. All right, guys, I'm going to leave it there. Thank you for joining me, and I will see you next time.